Hi, I am Jeffrey Wernick, and welcome to BitChute. I'm very happy to have as returning guest Garett Jones. I really enjoyed our previous conversation, and I thought, given just the other day's hearings regarding tariffs, kind of an interesting conversation amongst the judges, and now have to debate whether tariffs are a tool of raising revenues or a form of regulating trade. Um, so, so Garett, what was? I'd like to just read a very brief. That's not that brief. Trump Truth, as they say, from Truth Social. The last one I know that he's written on this topic, even though there might be a more recent one. I think this was yesterday or the day before. The payback numbers being quoted by the radical left lunatics who would love to see us lose on tariffs because of how bad it would be for our country are much higher than those being stated by our fake opposition. Opposition mainly from foreign countries that would do anything to be allowed to charge us tariffs without retribution. The actual number we would have to pay back in tariff revenue and investments would be in excess of $2 trillion. And that in itself would be a national security catastrophe. Those numbers to us in the United States Supreme Court are giving low numbers so that the court will think it is easy to get out of the terrible situation that these anarchists and thugs have put us into. What do you think of that statement?
Well, I think this is would be great news for America, because if $2 trillion really did have to be repaid to American businesses, just think of the huge investment boom we'd get when all this money showed up. It'd be a massive stimulus. So taking Trump seriously, which is always fun to do just for giggles, we can see that returning this tariff revenue would just lead to a massive economic boom. So let's bring it on.
Yes. I think the tricks he plays with his use of language,
Yes.
is kind of, he doesn't really talk about just, if let's say that we would have to pay back in tariff revenue and investments. I don't understand how if someone made an investment in another company, how would that trigger that company having to pay back an investment made by a foreign company?
Yeah. Donald Trump uses numbers for entertainment, not for and for persuasion, not for science, right? So the tariff revenue would be substantial. It would be like a big issue. Who gets it back? And there'd be a lot of lawsuits over that. And that's a big hassle. But courts can figure things out like that. They could even just say, well, we're just gonna wade through the past tariffs, but say the president has to stop them. I'm not a lawyer, but I presume they have that power.
Yes, and I also think why I have, well, his respect to the investment side again is completely absurd, because unless a company had invested in another company and they had a condition of having to pay back that investment, when again that has nothing to do with the U.S. government.
Exactly,
the US government
obviously,
is paying back. There is no evidence that companies have just given him a check and it's sitting in a bank account somewhere waiting to be invested. So if he's custodying money and it's custody like an escrow account, if there's money put in an escrow account and it's returned, there's no adverse consequence because the money's never been spent and it's sitting in escrow because there's no commitment yet to do something with that money. So there's also no damage doing to that. With respect to the tariff portion, why I have no sympathy is so far every ruling has been adverse to Trump's position on tariffs. So he knew going in that so far the rulings had been against his position on tariffs, yet he decided to run the risk, even though previous rulings had said his broad tariff policy was unconstitutional. So
I mean, that is his approach, right? He just likes to act like a fighter all the time. His team loves that. I can imagine some kind of game theory story where that's a good reputation builder, but he's probably going to lose in a substantial way on this particular bill. But as you know, but for the audience, there are other tariffs that Trump has imposed that are more likely to withstand legal scrutiny. But this IEEPA, International Emergency Economic Powers Act, doesn't even give the president power to use tariffs to control foreign trade. And he just was sort of hoping that they would let him do this. And so far, nobody's let him do it.
Yes. And I think when people talk about and given the fact that we do live in a constitutional republic, sometimes many people get that. The reality is, if it's supposedly going to cause this type of damage, his party controls Congress. And I think what we've seen from the shutdown is that basically the Republicans decided to treat the Democrats as they are irrelevant, and that's been a successful strategy of treating the Democrats as being completely irrelevant. So, Trump. So then the question that begs the question is, this bad outcome doesn't have to happen. If he loses the constitutional question, he could just go to Congress and say, look, you're not a radical left lunatic. You're not an anarchist and a thug. You want to save the country. Just pass the legislation that allows me to do everything I did. So and problem solved, right?
Yeah, but of course, what you and I both know is that there's no majority in either house to let that happen, right? Even though they have majority Republicans in both branches, there's enough people who just don't want to give this future president that kind of sweeping, naked authority over taxing power. I mean, there's a reason why legislature should have the power of the purse, right? It's built into the Constitution that the House has the original right to that, and they've ceded a lot to the president over the last, especially this year. But for generations now, that's happened. Congress keeps abdicating to a powerful presidency, and we'll see if I think they won't expand that power, but they may let a president keep the power he has.
Unfortunately, you're probably right about that. I think that if we go back to the founding era, and actually the founders did think to some extent that tariff policy was important. I mean, the first Tariff Act was pushed through Congress, in 1798 by James Madison. And there was subsequent tariffs put in place by both and embargoes put in place by Jefferson and Madison subsequently. I would think that Madison probably had a greater understanding of the Constitution than Donald Trump does. I would assume Jefferson also probably has a greater understanding of the Constitution than Trump does. And every tariff they put in place, as important as those tariffs were, okay, and some were during Jefferson's administration is when Great Britain was trying to challenge Americans' ability to trade with the world, and the French were doing the same thing. So I mean, now those were real threats, kind of existential threats that the U.S. had, when we had foreign countries were trying to use the ability, their control over the seas to prevent the U.S. economy from growing by trading with the rest of the world. So those were a real threat. They were a bigger threat than anything Trump alleges he confronts today. Yet they went to Congress. Okay, they never asserted, we have a foreign policy risk. It's an existential risk to the country. I'm declaring an emergency, and I'm doing whatever I want to do because Article 2 says I can do whatever I want to do. I never heard Madison, or there's no record of either Madison or Jefferson ever saying that. But there is a record that every time they wanted to implement tariffs, they went to Congress. They looked to implement tariffs when there were serious issues to be addressed. Whether the tariffs were the right policy or wrong policy, that's a completely different issue. The point is, none of them thought they had the discretion of saying, "I'm tariff man," okay, and I can implement these tariffs because Article 2. So I think Jefferson and Madison had a very different understanding of Article 2 than Trump asserts, and it will be interesting to see whether Clarence Thomas and Alito and Kavanaugh and the others, who they think is their authority with respect to construction of the Constitution. Will it be Jefferson and Madison, or will it be Donald Trump? So
yeah, I mean, this is a case where, as you know, the Congress and the courts in particular have been fighting back against the administrative state's power to have incredible discretion, and they've been pulling things back to Congress, right? And this is a case where, now the Trump folks, the conservative folks, are a little more likely to be sympathetic to the executive branch having a lot of discretion. So there's some kind of intellectual internal debate that's going on among conservatives. It doesn't look like the conservatives on the court, from the oral arguments, that a majority of them are backing this extreme level of executive discretion that the president wants. But, you got to count to 5 on this one, right? So.
Yes. What was your impression? Did you follow the transcript or listen to any of the arguments or read some of the reporting on the arguments made?
I've read a lot of the reporting. Of course, it sounded like Roberts was quite skeptical. That's my understanding. Gorsuch, similarly so. And I don't think, as usual, I don't think Justice Thomas said anything. He generally doesn't speak in oral argument. I'd be open to your recollections of the rest. I was in Europe at the time, and so time zones didn't work out for me.
One of the things I think that's like being lost in this whole conversation is, one is, besides the broad actions of Trump's use of tariffs, and apparently every other day there's a different explanation. One day we're going to balance the budget with the tariffs. We're going to give rebates with the tariffs. Then the next thing we say is, really, it has nothing to do with revenue. We would prefer that it generates no revenue for us. So
yeah, this is something where we wonder whether will the Supreme Court pay attention to the president's tweets, right? Because the president keeps talking about the tariffs as being revenue generators, but the law he's trying to draw on does not talk about revenue at all. That Emergency Powers Act is about stopping or at least curtailing trade. And so his lawyers are up in front of the Supreme Court saying, no, this isn't about money. And the president's on social media saying it's totally about money.
And that's basically been his principal argument through most of this period of time. And also the question is of course, many people have said that an important area of national defense is a strong economy.
Yeah.
So, but a strong economy is good, whether it's for national defense or any other purposes. So if you make the argument that anything related to the economy is an issue of national defense, then basically everything becomes an issue of national defense.
Yeah, this is something where libertarians have been the best on this for decades, right? They're the ones who saw that this jargon of the national security state could just literally lead us anywhere. And of course, after 9/11, that got a lot of attention because people were worried about the Patriot Act going too far and anti-terrorism activities. Now it turns out that basically, coffee coming from South America is a national security threat. So whatever you want to be a national security threat is one.
Or furniture from Italy is a national security threat.
So I mean, if you can say it with a straight face, the question is, can you get 5 Supreme Court justices to agree? And the courts have historically liked to stay out of foreign policy issues. So of course, what a prudent president does, or a cynical president does, is try to frame any grab of power he wants as just something about having to do with foreign policy.
Yes, because they've always, as you just said, they tend to give broad discretion to the presidency when it comes to issues of foreign policy. Even though
it's hard to draw the line. I agree.
Foreign policy, when some politicians from a certain province in Canada does a video,
that's crazy,
quoting Milton Friedman around was it
Ronald Reagan.
In a radio address that Reagan gave, and that now that becomes now a national security threat that subjects Canada to incremental tariffs. So I want to understand how our nation was threatened by hearing the voice of Ronald Reagan in an excerpt. It's never, I guess, never before has Ronald Reagan ever given a speech where somebody excerpted it. Nobody's ever given a speech that's been taken as an excerpt. Okay, Trump, I'm sure, and no MAGA person has ever taken the words of anyone else and just taken an excerpt of that and made that representative of what that person said. In the history of humanity, okay, nobody's ever taken the words of somebody else and created an excerpt and then recording that excerpt. That's almost all the media we get are excerpts.
Yeah. I watched the whole video, the entire President Reagan's original address. It was one of his radio addresses. He liked to do those weekly radio addresses, as you know. And I assume he was probably sitting at the Western White House. He's dressed casually. And it was a classic Reagan statement, right? I mean, he was imposing some temporary tariffs on Japan. But he believes in free trade. Like, this is something anybody who knows Reagan knows. He broke the rules. He bent the rules once in a while on his free trade beliefs for tactical political reasons. And but deep down, this is a guy who understood the Friedman-Hayek case for free trade.
So you wouldn't label him tariff man.
It's not tariff man, right? I mean, Ronald Reagan was an idealist in a lot of ways, but he also tempered that with pragmatism. So he was a free trader. He understood the theoretical arguments. He probably saw it over the course of his lifetime. But in practice, he knew that when you got into politics, sometimes you had to cut a deal. Sometimes the masses were too upset about this or that, so he had some steel tariffs. He had those voluntary export restraints on cars, and politics is the art of compromise, right? And he knew that.
Yeah, I think at that point in time, if people look back at the context and remember the context, I'm old enough to remember the context. Is the fact is at that point in time, people were worried that Japan was going to take over the United States.
Yes, yeah.
And we were buying only Japanese cars and only Japanese electronics and Japanese semiconductors, and there was a great fear at that point in time. The market cap of the real estate in Tokyo exceeded the market cap of all stock exchanges in the United States.
Yep.
So in that context, okay, where you have Tokyo as basically a wealthier, has asset values that exceeded the total asset values of every listed company on any exchange in the United States. It was under those conditions, and that Reagan implemented, very, very, very temporary measures against Japan, and as you so well stated, you got to cut deals sometimes, but that means because you do something, it doesn't mean that you really have that's your core beliefs. It means you're trading something that you value to get something in return. That doesn't necessarily mean that you've surrendered, what you really believe, and that's what Reagan did. So, being in politics, you have to compromise sometimes, and you have to compromise against things that you believe in, and it doesn't mean you're surrendering those beliefs. So, and he was careful about doing it in a very, very limited basis, and every time he did do it, he continued to advocate for the virtues of free trade. So, he never talked about, I love this to be a permanent policy, and, every country is screwing us over, and this is the way we got to get back, and everyone's screwing us over. So
he was not a grievance-based politician.
Yes, and he would make reference to the Smoot-Hawley tariff and the destructive nature of trade wars and permanent tariffs. Now, one of the things I'm very disappointed in this while we're dominating the conversation about does Trump have that right, we're really not having much of an informed conversation to the American public of the wisdom of tariffs.
Exactly. It's the passions that Trump manages to stir up get people to not talk about that important question. And basically, tariffs are basically one of the worst kinds of sales taxes one could come up with. Countries needed to have tariffs as an important form of revenue back when that was the most practical way to raise a lot of revenue, because you knew that the goods were coming into the ports, you could tax them there. Early states could not tax people, run something like a national sales tax or even a state sales tax. It's very hard. So tariffs were the way to tax because of government administrative weakness. We have different alternatives. The idea that 10% of your national revenue, which is basically what America imports in goods, that 10% of America's national revenue should get a big chunk of the tariffs, means you have to put really high tariffs, really high tax rates in order to raise a substantial amount of money. And that's incredibly inefficient. More importantly, it's not just that, I'm glad to complain about sales taxes. What I hate most about the tariffs is that they're a tax on American producers, because global supply chains are complicated. The best grommet in the world, the best computer chip in the world, the best little tiny wire that's important for a new medical device, probably made somewhere outside the United States. If you're making something that needs that has 100 different inputs, maybe 2, 3, 4 of them, you're definitely going to need from somewhere else in the world. And big tariffs on those key inputs can really just really hurt the supply of American innovation. Donald Trump is, thank goodness, giving economists a massive number of natural experiments that economists are going to use for years to study how tariffs affect the economy. And the one I'm most interested in is how it hurts American innovation and American production.
What's your sense of how it'll hurt innovation, or what impact, I should say, not hurt, what impact do you think it'll have on innovation?
I think it'll have a bad impact, and it'll have it especially in frontier industries, cutting edge industries. Because in cutting edge industries, you need exactly the right input to get the most value out of your product. And that it could be airplanes, it could be sophisticated electronic devices, medical equipment. And in those cases, that's what we call an O-ring production process, after the Nobel laureate Michael Creamer, who wrote about how a lot of things are like building the space shuttle, where if one O-ring goes wrong, the whole thing can blow up disastrously. And it's these frontier processes where there are few good substitutes, and the second best or third best option is almost like having no option at all. That's where you need the global supply chains to produce the best stuff. And if somebody tells you that your key input is 50% more expensive, that's going to really change what kind of production choices you're making down the road. Since all of Trump's tariffs right now nobody knows whether they're going to last. I mean, a lot of companies might just ride these things out. But if people thought that a lot of these 50%, 80% tariffs were going to actually stick around, that would have a disastrous effect on frontier American innovation, because you need just the right ingredients in your recipe when you're trying to make the best recipes in the world.
Yeah, I agree with the way, and when I did one of my own segments that I call What the Wernick, where I talked about the why I think the pass-through rate has been so low on the tariffs to consumer prices, is because I think businesses were hoping that this would be very temporary measures, and the last thing they want to do is raise prices to the consumer. First they try and cram down the suppliers to the extent that they can, then they try and cut costs, where they see, so that they can, have some degree of increasing an operating margin to offset, the amount of tariffs that they pay. And then finally they try and hold the line and keep prices, from rising very little, because they don't want to pass through to the consumer at this point in time. And a number of companies have made those announcements that they basically have decided that they would eat to their bottom line the cost of the tariffs, but it's not sustainable that they continue to do that. They're not going to eat like GM said it cost them $1 billion or something like that. Ford says on this. So the question is every quarter, every year, are they willing to absorb, that $1 billion, or they only do this for, a temporary period of time, and to see whether they will be lasting or not lasting. And I think it's been reasonable. I haven't checked prediction markets. I don't know if you've checked prediction markets on whether people think that the tariffs will be sustained by the courts or not. But most of the people.
Yeah, I did.
And what is the bets on prediction markets on the tariffs?
It dropped quite a bit into the 20s after the Supreme Court arguments. Now that said, when I went and looked earlier at the terms of the contracts, it was there are a lot of ways the president could win according to the contract, even if the Supreme Court struck down much of the reasoning. So I never felt like betting on that contract, because the details were too detailed for me to understand what would count as a success or failure.
Are the prediction markets generally saying the market doesn't think that most of the tariffs will be preserved?
In particular, about these emergency tariffs made under the IEEPA. That's what the Supreme Court decision was about. What the Supreme Court argument was about. That's probably going to be struck down, at least according to the terms of the contract. The question is like I said, the details of the contract were pretty complicated, but largely struck down as what it sounds like is the most likely outcome, but not 99%, which I wish it were.
But it seems to indicate that if you looked at the markets for the betting on what the likely outcome would be, that most of the companies that have paid a lot in tariffs should have the expectation that a lot of that money, the expected value of how much money they're getting back, is 80, 90 cents on the dollar, something like that. So,
yeah.
So that's a pretty high amount. So that's another reason why, given the fact that they think there's a high probability, or their expected value of how much money they'll get back is they'll get back, more than half of it. That's also a reason not to pass it on to the consumer yet, is whatever you paid is just temporary. Someone's holding it, you think you're likely to get it back.
Yeah.
So when we cite the information today about why not all of this is shown up in the consumer price indices, there's a lot of rational reasons why it hasn't yet. And that doesn't mean that tariffs are not inflationary. It just means, given the circumstances at this point in time, where Trump has instituted tariffs that many believe are illegal and will not be upheld, that therefore most of the companies will get whatever they've paid in tariffs. They'll get the money back. That's something that at this point in time, since it might be temporary in nature, they don't want to pass it on to the consumer. So unfortunately, when I see, whether it's, when people talk about tariff on the media, or even on news shows, I don't see people making this argument and explaining it this way.
Yeah, that's a good point. I just to fill in here, Kalshi, one of the betting markets, shows that just before the Supreme Court argument, there was a 38% chance of Trump winning, and by the end of the Supreme Court arguments, it was down at 22%. So about a 16, 18% drop after they heard the court. I want to say that John Cochran, who was at the University of Chicago for quite some time and is now at Hoover, he was corresponding with a major business owner, he didn't name who it was, who gave an explanation for why tariffs hadn't shown up in prices that overlaps a lot with yours. But he has one more reason that he gave, which is he said that there's a strong business norm that if you paid for this stuff at the pre-tariff rates, that you wouldn't mark them up, even though you were in the post-tariff era. So that's almost a behavioral economics norm, a sort of fairness norm. Like, I paid 20 cents for this. If I bought it today, it'd cost me 30 cents, but I'm going to charge my price as if I got it for 20 cents. And so selling the old stuff off the shelf with an old price markup is basically the way a lot of businesses wanted to behave. And he said, just like you said, they're sort of phasing it in over time. They're breaking up a bit, but they were following the norm of, if I bought it at a cheap price, I should sell it at a cheap price.
And many of them, in anticipation of the tariffs,
were
stocking up prior to the implementation of the tariffs.
Front running the tariffs. Exactly. That's the term they use.
Which was one of the reasons why we had that one strong quarter of economic growth, because a lot of people were front running. A lot of people
were trying to import then, definitely, yeah.
Yes, and it's also a reason why we had strong economic growth without really strong employment growth, because they were buying a lot of stuff from abroad, but not necessarily hiring and resourcing back in the United States. We've seen really no. Have you seen people reporting any sense of any really? I mean, there are few people have announced that they're going to bring production back, and
those are just statements. Those are PR. Those are PR activities, right?
Yeah, those are non-binding statements. Okay, which the same type of statements were made in 2016, 2017 when Trump was elected. He did exactly the same thing. He went around, he got people to make all these statements about how they were going to invest trillions upon trillions in the U.S. and very few of those statements. Nobody was really willing to collateralize those statements. So, and they were non-binding in nature. There were no binding obligations on them. So it's very easy, the president of the United States comes to you and says, I really want you to basically say how you're going to invest this amount of money in the United States. And the person says, okay, the president wants this. I'll make this statement. But at the end of the day, nobody can force me, to live up to the statement, and anybody hearing it knows it's a statement of intentions. So nobody's taking these statements, very, very seriously as serious statements, other than Trump lovers, who want to cite evidence of how so many people say America's back because look at all the money people have promised to invest that is not really a promise to invest. It's just noise, to satisfy an audience. So
the best evidence so far is that manufacturing hasn't had a particular boom, aside from the important fact of the AI boom, right? We all know that there's a huge AI boom going on right now that's helping to cover up what are probably costs of the new tariffs that are going on right now. And a best guess is that the AI boom is adding about 1% to GDP this year, 1% to GDP growth, which is amazing. It's probably bigger than the late 90s internet build out. And it's going to be world changing in important ways. And that's helping to cover up whatever weaknesses are going on elsewhere in the manufacturing sector.
What are the ways you think it'll be world changing with the AI and the build up in AI?
I think it basically gives a lot of people a second worker sitting right by them who's a little bit quirky and weird, but really, really smart. So I feel like I've got a genius, eccentric research assistant sitting next to me all the time that'll work on anything. And by eccentric, I mean like totally wrong 20% of the time, but giving me great ideas the vast majority of the time. So that's the sort of easy fix right now of what AI is going to do is basically it'll be equivalent to a sizable increase in our intelligent labor force. That matters a lot. And it gets phased probably over 5 or 6 years. Everybody's using it at work right now. I mean, just everybody does. That's just what happens. The real successes will come down the road when AI can take on tasks by themselves and do things and be trusted to say, handle financial activities, handle autonomously more complicated problem-solving business chats, more complicated problem-solving business discussions. That's going to actually really increase our supply of independent workers in the economy. So basically, anything that involves skilled workers, what I agree with what Larry Summers said, which is that AI is coming for the cognitive class. So what happened to manufacturing workers back in the 70s, 80s, and early 90s? Some version of that is going to come for a lot of us who have desk jobs right now. It's hard to tell exactly how that shakes out. A lot of us, the market always wants people, and people are going to have their unique strengths compared to AIs. But we're going to see a lot of changes in the labor market over the next 5 years. Yeah.
Well, the question is, will the AI make the cognitive class even smarter, or will it replace the cognitive class? Or while it's making the cognitive class smarter, the AI is getting smarter at a fast rate. So at the end, the cognitive class might not have a current advantage, but as the cognitive class is interacting more with the AI and using more of the AI, so the cognitive class can actually get smarter itself. That while it's doing that, the AI is getting even smarter and smarter at a faster rate than the cognitive class is, and that soon the AI, or over some period of time, the cognitive class might actually be passed by the AI, and therefore the AI, instead of enhancing the performance of the cognitive class, will then be in a position to replace the cognitive class.
Yeah, it's hard to tell what's going to happen, because will this end up being like agriculture, where basically the machines do the job so well that we just don't have many people in agriculture anymore? And will a lot of these sort of laptop jobs just get replaced by AIs? And many organizations already went through this in the 80s and 90s, where computers replaced a lot of mid-level managers, right? We saw this big flattening in organizational structures, where companies that were like the Army, big bureaucracy, became more like the Marines, flat bureaucracy. And America survived that. So the question is, will another layer get annihilated by AI as they take out a lot of these laptop class jobs and give real humans something else to do, which might involve a lot more in-person interaction?
Well, I think amongst mid-management people who are, if you're mid-management, you probably have reasonable level of cognitive skills, but not really exceptional levels of cognitive skills. I think I remember once when I lectured at a university. This is not like a year ago or 2 years ago. It was over 10 years ago. And I asked the students, when they would like to basically be able to recite, they wanted to learn all the equations in the textbooks, and that I would give exams that basically they had to just plug in numbers and that they solve that, and so they wanted to learn that way. And I would say to them, I said, I get one exam. I said, tell me how you think you could outperform a computer. And this is just the statistical tools that we had at that point in time over 10 years ago. And most of the students struggled in coming up with an explanation of how they could outperform a computer. So so I said, I rest my case, after doing that. So early on in my career, that's basically how I tried to make money, is trying to come up with algorithms that I thought, could outperform people. They were like give you an example. Fisher Black wrote an article on how if banks decided to drop all their lenders and applied value line rankings as a risk for actually not investing in the stock market, but how to allocate who you lend to based upon a value line rating. Basically, Fisher Black said that maybe what you can do is you can replace all your lenders and just buy value line and build a model and just use value line. Well, I got control of a bank, and I did that. I fired all the staff. I had the lowest operating costs of any bank. I saved more than 100 basis points of operating costs in the bank, and I just used value line. And the regulators came in and we always hated that fact that I was doing this, and they were looking for all the ways they could shut me down. But given the fact that they couldn't come up with any measure that they could come up with that I was inadequately capitalized. So they were looking for an excuse to intervene, but never got the excuse to intervene. And I had a conversation with Fisher. I implemented it while he was still alive, and
great.
Actually, I wanted him to share in the profits when I exited the bank, because I took, even though it was in the public domain, his article, I basically just used his model. So, he said it was in the public domain, so he has no claim against it. But I wanted to show my appreciation because it was his idea. Even if he put the idea in the public domain, I wanted to give some acknowledgement of the fact of where I got the idea from. But but it was interesting. The regulators hated. They came to the bank and they would argue all the time on downgrade loans, and they were doing their best to come up with any reason why that the bank had no capital, but they never could succeed at that. And the main reason why we decided, my partner group decided to sell the bank, it was not fun. I mean, so to be arguing all the time. I mean, that my job was basically arguing with the regulators every day. So
I can understand that. Yeah.
It's profitable, so we were. Life is too short, and that's not how you want to make money. Speaking to regulators and arguing with them over something that's working well and has you by every metric being healthier than any other bank they're talking to, that they're not harassing. It's a simple heuristic that Fisher came up with because he had such a creative mind. Actually, worked really well. In real life at that point in time. So I can't speak for it today because I'm not involved in banks anymore. But then it worked out well. So then you could make the evidence that simple heuristics could outperform most bank lending officers. So
I had a similar experience giving advice to a bank in a developing country, very well run bank, great executive team. I got to know them a bit, and at some point, I was asked, like, can you evaluate our active bond trading portfolio? We have a bunch of folks, a team who trades bonds in middle-income countries. And so what I did is I kind of just looked at the returns and the variability of returns of their portfolio, and then I compared it to an index fund of bonds that basically was of the same risk level, and it had a high rate of return. So I just wrote up a little memo and sent it to the CEO, and he found it very interesting. I don't know whether he ever acted on it, whether there were strong internal forces, but the idea that, active trading is expensive. In the case of the bank you're talking about, of course, hiring all those lenders to make decisions is super expensive. And the best alternative is going to be like, should I just have a well-diversified index fund that has a comparable level of risk?
Yeah.
So, yeah, like, the bond portfolio ended up being something like that I picked was something like a BAA rated. It might have been a little lower than that. Mm-hmm. And the staff said, "Oh, that's too risky." And the CEO said, "Come on, we're a bank in a middle-income country. We're not totally safe. Our portfolio should not be AAA." So, learning about how real-world banking decisions up close happen, it taught me a lot.
The great thing also about this model, using that, is the only credit committee meetings we'd have regularly was to review the model. But if somebody came in and once they submitted the loan information necessary for us to be able to model it relative to coming in with the value line score, we would give an answer. This, if it came in the morning, the same day they'd have a decision. So what we were doing is we were actually pricing loans cheaper than other people were because we had significantly lower costs. Mm-hmm. So for a company, if I have 100 basis points lower cost, if I give 1/8 of that benefit to my customer, that's material to the borrower. One of the savings. So if I give them a cheaper interest rate and give a quicker decision, that meant it very attractive to do business with the bank, and that was part of the edge. Part of our edge was we passed off of the savings that we had from not having lending officers. We were only passing a very small amount off to the customer. We were keeping all the rest for ourselves, and we were making decisions much quicker than anyone else. So, and the people who are like in a decent shape but need money pretty quickly, those are the ones you have the most bargaining power with. And a lot of small, mid-sized businesses can't wait long periods of time. When they need money, they typically are not in a situation where they can wait a long period of time to have to hear an answer. So we were able to grow the balance sheet significantly. The buyer of the bank actually abandoned everything we built. So they paid for all this extra profit associated with the bank being run this way. But then when they bought the bank, they ended up running it like anyone else would have run the bank. So the spreads all narrowed, and I think they probably regretted buying because I don't know why they thought they could sustain abandon the business model and still sustain the profits derived from the business model. When you say talking about banks, yes, banks is I think any industry where you're heavily regulated, the decisions, how you make decisions are it's kind of like perverse. I'll take another. I had a bank lending me money, and whenever in a real estate venture I had, whenever I put loans in, I always required if a bank wanted to sell my loan to a third party, they needed my approval, and I didn't have to, and they should have no expectation that I would give my approval. Mm-hmm. Bank, I owned some real estate in an area that was kind of distressed at the time. The bank had lended me about 100% of the value of the real estate I bought. I just had to keep a reserve in place to for capex for the real estate that I'd owned. Apparently the regulators hated the loan. And while I was not in default of any, I didn't have a money default or even a covenant default. The regulators still hated the loan, and they went to the bank and they said, "We want you to sell this loan. We don't want you to keep it on the balance sheet. You're like very dumb at making these types of loans. So we don't like this loan. So sell it. So the CEO of the bank would contact me and say, I need to sell the loan. Can I get your authorization? I said, no. So, not happening. He said, the regulators are forcing me to. I said, that's your problem. It's not my problem. So he kept on lowering the price. I said, look, I will consider buying back the loan from you, but I'm not letting you sell it. So I ended up buying back the loan at like 20 cents on the dollar because we got so much pressure from the regulators to sell.
Okay, 20 cents on the dollar. Wow.
The only one he could sell to was me.
Yeah.
So I could have I probably could have gone down to $1. Desperate because the regulators were just, why is this loan still on the books? Why is this loan still on the books? So he would tell me, I have such a headache with this loan. I have such a headache with it. They keep writing the loan down. They keep writing the loan down. I said, well, when they write it down more, you and I will have a conversation. I'll buy the loan back from you. But no, you're not selling it. So when it gets to a price where I know this is going to be a ridiculously cheap price, at that point they'll come in. But you and I know I could basically write this down almost zero, and you'll still force to sell it. So I'm not gonna do that bad on you by having it go down to zero, but I'm taking advantage of the situation, for myself. But this is exactly why, one of the reasons I put provisions in that I didn't like people, because I always said you and I are investing in a relationship. So I'm not transactional, I'm relationship. So if you believe that we're building a relationship, you wouldn't want to sell the loan without my consent because it's not like you're moving the loan, you were terminating the relationship. And I don't think you should be able to terminate a relationship unilaterally. If we're going to terminate a relationship, if we're going to get divorced, it should be based on mutual consent. So, and the last thing that should happen is a third party could come in and force us to be divorced. So, basically, I gave them logic they could not dispute. So because the banks want to tell you, we really like you, we want to build a relationship with you. It's like a marriage, and we're building a relationship that we want to build and do more things together, not just this deal. So therefore, there should be no reason for you to want to separate from me or me to separate from you. We're a relationship. So I don't want you to. I'm happy to show you my business first, and you can't sell the loan because that's like us getting a divorce, and there's no you having a no-fault divorce where you can just divorce me without my consent. So that's what I would explain it, because they would always tell me this is a relationship. We're building something together. People wouldn't say to me, this is a transaction, you're a commodity. If they did it that way, then I would not have that conversation with them. We would have established in advance that this has nothing to do with relationship building, that this is just a transaction. So, but since they publicize it in a way consistent with the words they're telling me, I want the document to reflect all the words they're telling me. So that's typically what I do when I negotiate. You get people to talk a lot, you see all the promises they make, and then you see how many of those promises they're willing to now put down on paper. And once they say something they're not willing to put down on paper, to walk away from that person. So, but the regulators are just, I wouldn't like to do any regulated business. So, I mean, you're now doing nice work in the regulated businesses, but I think just dealing with the government is just a horrible, experience. But are many, when you sit down with other, professors in economics, academics in economics, is there really a concern that what is going on now in politics is debasing economic education and the economic literacy of the American public? And should that be a great concern of ours?
Yes, especially on tariffs. I mean, of course, this gives economists an excuse, an opportunity to teach this stuff. But now that international trade has become part of the culture wars, you've got many conservatives who used to be open to free trade now being really hostile to it. So, we're kind of used to the left being, anti-free trade. That's something that was traditionally, people who are free market folks were used to that. People who taught economics were used to that. union folks and whatnot would be worried about this. Now it's the nationalist right who thinks like, why should I be exporting things to other countries when Americans could have them? Why should I be importing things from other countries when Americans could make them? This sort of skepticism, that overlaps so much with nationalism, I think it's going to make public education harder. Like, basically speaking to the public means you're sort of talking. Partly that's because of the culture war feelings, and also at the elite level, higher. Since I live in the D.C. area, people now know that you can't be saying too many things publicly that Donald Trump would disagree with, or else you just get pushed out of the movement, because his level of loyalty tests are far higher than we're used to seeing in American politics.
So that makes it hard, really, to promote, free market economics. I think, and I mentioned this on the podcast I did just the other day. I guess you're familiar with, and maybe not, the book that Zingales and Rajan wrote years ago, Saving Capitalism from the Capital.
Yeah, the capitalists.
So when we mislabel, when basically we have capitalists that don't really embrace capitalism, they embrace retaining as many profits from the businesses, but they like private property. Mm-hmm. Okay, but that doesn't mean if you define basically capitalism is just private property, that's an incomplete definition. No. That's a very incomplete definition of what capitalism represents. So, I contend, I don't know what you think about this, but when you see people like Mamdani, get elected mayor in New York, and why so many people want to see a different model is they reject capitalism, not because they've experienced capitalism. They've experienced something very different than capitalism. It's called capitalism, and because it's called capitalism, they hate capitalism, but it's not capitalism. So for areas like what you teach at George Mason, University, which takes capitalism very seriously, I think if we look at capitalism as either the way Adam Smith would define it, or a way Milton Friedman would define it when he wrote his book Capitalism and Freedom, our model today doesn't remotely resemble the model described by either Adam Smith in his book Wealth of Nations, nor in Friedman's book of Capitalism and Freedom. Why are so many people in the academic world still willing to describe the U.S. as a I don't think U.S. remotely resembles a capitalist country. So why are so many academics still willing to defend our model as being a capitalist model?
Yeah, that's a good question. Basically, I think it's a question of how much one wants to fight over jargon, right? Because there's never going to be a pure capitalist society. Even Hong Kong, probably at its peak, was in a pure capitalist society in the sense of laissez-faire, free entry, limited restraints on supply. But you're right that America has become dirigiste in so many ways, right? It's disappointing we have to use a French word to describe something that's so American now. In particular, the fact that America is sort of the cleanest dirty shirt here is one reason that it's hard to get away from that term. But when I think about what's central to something that I would think of as a free market capitalist system, you need two things. You need people to be able to engage in freedom of contract on almost all private sector activities. Mamdani's really against that. And you've got to be really open to create destruction and allowing new firms to knock out old firms. And nowadays, it's the right that's worried about that, because they're really worried about security, economic security, safety of incumbents. I have a job here. Am I going to be able to keep this job? So the left wants to regulate capitalism, and the right wants to regulate competition. And those are both really bad. Those are really, really bad for thinking for anything we'd want to call a free market capitalist system.
So, but doesn't that put at risk America's support for capitalism if something that's not really capitalism is called capitalism? Doesn't that justify people saying, I don't like this model, and they think it's a capitalist model that's not really a capitalist model. So when we
yeah, this is a language thing. We just need a new word for it overall, right? So I mean, Ayn Rand loved the term capitalism, but there's another way to interpret the term capitalism, which is that capitalism is ruled by the people who currently have a lot of capital, right? And that would be a very much a rent-seeking, insider control form of politics, right? So I like to think of capitalism, I think you do, as capitalism is a story where anyone can decide to become a capitalist, and there's some plausible path. You've got an idea that you can be a good idea that you can become one.
Right.
The cynical political public choice version of capitalism is ruled by the people who currently have capital. That's going to be insider control. That's what Luigi Zingales was, of course, really worried about.
Yes. And I equate, free market capitalism, free market, in a sort of Bastian sense, is that basically it's voluntarism, is the fact that all our decisions we make, we enter into voluntarily, and there's that every day our interactions with other people are all based upon voluntary transactions where as little as possible is something that's coerced upon us.
Mm-hmm.
So it seems to me the more of what we do that's coerced on us, where it's not us being able to freely engage, with other parties and create a document that reaches our mutual consent, because neither party has a gun to its head to, because we think we're doing something that makes all of us, all the people who signatory that, we think when we go into it ex ante, we're all going to be better off by agreeing to that agreement, that basically the government should keep its hands off, including complete separation of money and the state. So, once you involve the state, and therefore forcing decisions on people that's not based upon their own free will, which also includes buying stuff independent of where it's made. People should have the freedom to buy stuff, and if company says, people have the freedom of choice of saying, gee, if I think it's good for the country and I'm a nationalist, there's nothing preventing me from nothing forcing me to just buy companies that promote themselves as being all made in America. So I mean, that's a voluntary solution. It's just basically saying is if people really believe what they say, which people don't, okay? But if people believe what they say, then they basically would say they just buy companies that would basically say, we make stuff in America and fully America, that would be the dominant business model, because that's what people want to do, is they want to buy American. But that's not, it's like every time I ask somebody who says, I don't believe in globalism, I said, can you show me a mobile phone? Okay. So what mobile phone do you have? Do you have an iPhone? Okay. Show me an iPhone. You have an iPad? Yeah, you got an iPad. Okay. Where do you think the components come from there? So you say you don't like globalism, okay? So, but you have this, okay? A lot of it's made in China. Some of the strategic relationships that Apple has are Chinese suppliers. Some of these Chinese suppliers have moved production out of China. They put it into, they had some in Taiwan. They had some in India. But they're still not in the U.S. So but you hate globalism and you want to buy all American. So what's your car, by the way? What car do you own? So all these people say, I want to buy Americans. It's very simple. If people's preferences are they want to buy American, you don't need a government to force people to do if they're supposedly willing to do it on their own. And if they're not willing to do it on their own, why do you want to force things on other people? That the only way you'll do it is if you're forced to do it. So why do you want to deprive people of choices? Because you don't like those choices. So once you embrace a system like that, you can't call it a free market capitalist system. So there's too much interference of the government in that process, and they're a key allocator, credit. What happens if I want to keep my money in a bank, where most people have limited savings, they put their money in a bank. Well, the bank has great restrictions on what they can do, with the money. So, I think what percentage of the country's savings are in bank deposits? So if you think about bank deposits, what do regulators want to see banks do? They want to see them make mortgages or lend money to, or buy government securities. So basically, the governments force a significant percentage of our savings to be allocated to either mortgages or 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 or, or government securities. And how do they do that? They do it with capital guidelines. If you get a AAA, if you lend to Apple, that's AAA, you're going to need X% capital. But if you lend to the government, you're going to need almost no capital. If you put a mortgage-backed security, you're going to need no capital. So basically, to you, your risk-adjusted return is significantly higher, but it's not significantly higher because that's how the market would price it. It's significantly higher because that's the rules we establish. Because we don't want you lending money to these other businesses. We want you to take a lot of the money and buy the government paper we issue, which is either agency-backed paper mortgages or direct government
long-term treasuries. Yeah,
and that's clearly so. The government kind of forces the allocation of most of our savings for most people who are non-accredited investors. I basically say, if you're not an accredited investor, you don't face any capitalist country, any investment, because everything. If you go to a bank, if you go to a brokerage firm, they say, well, you're not accredited, so I can only invest you in this asset class. So you don't have every asset class open to you. You only have a limited set of asset class open to you. And the only asset class you have open to you is what the government stipulates you're allowed to have open to you because you're not an accredited investor. What percentage of the American public is non-accredited investors? Okay, I'd say it's got to be at least 80% of Americans non-accredited investors. So how can you call any of them actually facing capitalism when they take their money, their investment opportunity set is so restricted by the government? How could you call that a capitalist system?
Yeah, you're right. I mean, I wish that the term free market capitalism would catch on. I don't think we're going to work with. I've heard voluntarism, of course. I'm familiar with the term. I don't think that's going to catch on. Unfortunately, it's a little too narrow, too far off from the capitalist idea per se. But calling it free market capitalism, I think, makes clear what the positions are on this question of whether people don't have a lot of choices if they're not accredited investors. Don't you think they still have a lot of choice just being able to invest in index funds, individual stocks? I mean, of course, those companies have all been through a lot of filters from the SEC or whatnot, but that's still so much more choice than being stuck with bank savings deposits.
I think if basically you look at the type of securities that have created like alpha, so higher, most of what has created alpha, they can't invest in.
Yeah,
so
that's a good point. Yeah.
So the point is they can't accrete wealth at the same level somebody with a different balance sheet can accrete wealth at.
Yeah.
So the question is why would we want to restrict? Well, I always find curious. The government says, we really want you to be an informed investor, so we don't want you to take a lot of risk. Okay. Well, we have one exception. Okay. If you want to go out, get your paycheck, go to a newsstand and invest 100% of your money in a lottery ticket, we're going to do nothing to stop you from doing that. Okay. So
a negative net present value investment almost all the time, right?
So exactly. So while the government actually does commercials pushing people to buy, we really want to be a caretaker for your savings. Okay. But we don't mind taking every penny you have, buying a lottery ticket, that has an expected value significantly less than all the things we're telling you can't invest in, but here you can put everything in, and the person selling it to you doesn't have to understand anything about the risk associated with the ticket they're selling you. Like, do the newsstands have to tell you when they take a ticket, let me sign this form where you can read all the risks involved in it, the probability and its expected value and all this stuff? And do they have a prospectus when they're issuing it? No, they're just saying is here's a bet. We're putting out this number of how much money that you can make. They promote if any investment bank promoted the investments the same way the government promotes the lottery ticket, they'd all be in jail.
They would be, exactly. Yeah, true. Yeah. So
this is I mean, do I think that people have more freedom here than they have, a lot of places? Yes, but does that mean that they have the type of freedom they should have in a free market,
No.
capitalist system? In a free market capitalist system, if somebody's an adult, you treat them like an adult, and paternalism is not free market capitalism. So once you make the statement of saying adults are not capable of making their own decisions, so the government has to substitute decision making for them on their behalf, that's an authoritarian model. And anything, free market capitalism is an anti-authoritarian model, which is why, as Milton Friedman asserted, capitalism and freedom go together, even though that's not necessarily really the case, but basically it's, he would assert that that's the optimal conditions of the states. How much has this changed? I don't know how textbooks have changed with respect to how economics is taught now, when we have all these issues where a significant part of the country is nationalist populist. You have nationalist populists on the left, as you described, nationalist populists on the right, so when people go into a classroom to study economics, and then they see everything that's printed, in every source, including, again, whether you're watching CNBC or any news shows, there just doesn't seem to be there doesn't seem to be enough promotion of really, a libertarian, a libertarian point of, I don't consider Milton Friedman a libertarian. I think many people do. But I'd even be happy with somebody like him, promoting the type of ideas of Milton Friedman. I think his son is legitimately libertarian.
Yeah.
So I like David's work very much.
It's great. Yeah.
His work, was okay.
I'm a big fan of his father's work too. So. Yeah.
So.
I'll say.
So what can we do, especially you as an educator, not just personally you, to really in an environment like this get out better sources of economics literacy in the country, and the danger of people being so economically illiterate, and really who has the authority to speak out, where people should respect, what they have to say, like a Milton Friedman once had.
Yeah, that's a great question. I will say that good macroeconomics textbooks always say something about the importance of good institutions, free markets, competition as being part of creating prosperity. It's not often as long as I would like, and so I beef a lot of that up. But I have to say that just in last week, John Styson, who's a young, I think maybe 40-year-old economist, he and his wife are a great research team. He was lamenting on Twitter that when we teach the capitalist system, the market-based system is for creating value. And so I believe he's a professor at Berkeley. And I don't think of him as particularly political. I mean, I couldn't tell you what his politics are at all. But the fact that he kicked off a discussion online saying, like, we really should be teaching people more about the economic system we live under and its strengths and its weaknesses and where prosperity comes from. That was a nice chance from hearing what I think of as a kind of a normal macro economist, not an institutional economist, not an active libertarian, saying we need to talk about the importance of the market system for creating prosperity. So I think, again, textbooks beefing it up is good. Doing comparisons from history, explaining using economic theory why it is that you want competition and entry, and why you want competition from around the world, you don't just want to be competing against people in your own country. Those sort of perennial basics matter a lot, and I'm glad to say that just today I was listening to one of the new Nobel laureates, Philippe Aghion. I was listening to him actually in French, explaining his views on markets, and he's definitely in this camp of the Zingales camp that you need to save capitalism from the capitalists, that to keep Schumpeter's creative destruction going, you need to make sure that your politics doesn't get so messed up that the insiders, that the incumbents block new competitive entry. Is fair in his economics? Probably not as much as you, but he's been carrying on in the French media a big debate against Zuckman, talking about how if we get this Zuckman wealth tax, that that's the death of French innovation, and how competitive markets, entry, innovation, losers losing rather and winners winning, that's central to prosperity. It's weird to think that I'm hearing it better from a guy in French than I'm hearing it in English in the media.
Yes, I've read Aghian's work, and I like their voices out there that are talking about the importance of markets. What kind of response when you saw this on Twitter? What kind of, did you look at the comments? What kind of comments were?
Yeah, the other leading economists who joined in were totally sympathetic and supportive. So with a little luck, the people who write the 3 or 4 big intermediate textbooks will do more of this. I know my colleagues here at George Mason, they cover a lot of the magic of capitalism, the power of the invisible hand, in the way they teach. Actually, their front cover, Cowan and Tabarrok, Modern Principles, the name of the book. Their front cover is basically an invisible hand, and they have that running theme all the way through, that you need to be able to think 2, 3, 4 steps down the road to consider the consequences of government activities and how they could have really bad consequences, even though they might have good intentions.
Path to hell is paved with good intentions. So.
Exactly. Yeah. I should probably start heading out in a few minutes for my next meeting, but I'm glad to stick around for a few.
Oh, okay. So, are you teaching now also? Or is this a semester you're teaching?
Yes, I teach an online class, which is public choice, the great GMU field, about basically teaching people cynicism about politics. And I was just teaching, it's an online class. And so just last week, we were covering Gordon Tullock's great ideas on rent seeking, and some stuff about government corruption and the attempts to peddle influence. Those are very important topics, of course. And my other class is actually graduate monetary economics. And next week is actually our class on cryptocurrency, stable coins, competitive monies. Some of my colleague Larry White's work, of course, shows up in the class. It'll be coming more as the semester goes on. But next week I've assigned some of my students some of his work on free banking in Scotland.
Oh yes, I like Larry's work on free banking. So
yeah, fantastic. Yeah,
I'm very sympathetic to that perspective, in basically having a free banking environment and abolishing all legal tender laws. So
yeah, people want to look at this book online. It's free at the IEA, the British think tank. It's called Free Banking in Britain. That's the title he chose. It's a classic now. You can just read the history chapter. Like chapter 2 is what I'm assigning to my students. Just a great way to see, like, oh, I can actually have a monetary system that works without the government doing much of anything. The invisible hand can create money on its own, and it works in a sophisticated way, and works on a day-to-day basis. It can withstand crises. It's not perfect, but I know government-run money isn't perfect either. So don't compare it against utopia. Compare it against the best alternative.
In your sense of what's going on in other universities, I mean, George Mason is definitely, maybe I'm making a false statement, is an outlier.
Yeah. No, when I saw Stuyson at Berkeley saying this, that was a reminder to me of how important this is. I mean, I teach out of Chad Jones's intermediate macroeconomics textbook, and he embraces the power of markets in a really important way. Market-friendly institutions are, he has a section about how important that is for growth, and he has because he builds on endogenous growth theory. It's that viewpoint says that the more people there are on the earth, the more ideas we can come up with, and the more we can share those ideas with each other, which is really a sort of cornucopian way of looking at the world, an abundance mentality, you might say nowadays. So he's I don't know his personal politics at all, but compared to the average college class you're going to be getting in other departments, you're learning a lot about the merits of a market-based system, especially the first half, which is about why some nations are richer than others, how growth happens over time. When you get to all that stuff about business cycles, all that stuff kind of gets lost in the fog. But the first half is, I love teaching that because it has this sort of abundance optimistic mentality that says, like, hey, markets work really well, and let's be actually kind of dismissive of critiques of that.
Yeah, I would hope that maybe the academic world will fight back, even where there are many ideological differences in the fact that they still think institutions are important. And we have, not that I really want to make this about Trump, but you do have an unusual president who basically wants to replace almost every institution with executive fiat,
with his own personal discretion. Yeah, exactly.
Well, given the fact that anyone who thinks that economic growth should be tied to strong institutions, and you have a president who's basically trying to destroy almost all institutions, and in order to basically amplify how much presidential discretion they had, that whether you're a Keynesian or monetist or Hayekian, whatever, that's got to be something that you find troubling, is replacing institutions with an authoritarian approach. That you would think that there'd be more of an uprising from the academic world of wanting, especially, that's why I think this issue should be an issue of uniting the academic world on the tariffs, because independent of whether people believe tariffs are good or bad, I don't think anyone who thinks tariffs are good or bad really wants to model where the president is directing
deciding this exactly
economy through executive orders.
Yeah, the only people who get excited about this are the nationalist populists, who are heavily influenced by basically monarchist or authoritarian thought. They love the idea of there being a great decider who just makes these decisions on behalf of the great polity. And that's basically a lot of, I think, Lord of the Rings type thinking about, like, we need to have the one true king who will come and save us. It's a romantic point of view. It's not a scientific point of view.
Especially with the fact that it's very easy to go do the work on economic freedom, and how over a long period of times the wealthiest countries are the ones that are the greatest practitioners to the extent possible of practicing economic freedom, and that there's a lot of data that supports that.
Yeah, and one of the politically correct alternatives to this that actually Daron Acemoglu came up with in his own research was this idea of constraints on the executive. So, some of these economists didn't want to actually use the economic freedom indices too much. They a little bit too libertarian, maybe a little too ideological for them. But the one that Acemoglu popularized was restraints on the executive. Are there constraints on the decision-making power of one person? And that's what we're seeing with Trump now, is what happens when that discretion is just gone. So, I mean, he's a broken clock. He was right twice a day. So, I don't hate literally every decision he's made. But this idea that you want to trust a person on top with that much discretion, that's a bad way to go.
Well, I think that's an excellent, because you said you had to go soon, excellent concluding statement. So what else would you like to use the remaining time you have before you have your next commitment, of maybe something I didn't ask that I should have asked, or something that you'd like people to know that you want to share words to be, Garett?
Oh, yeah. Well, I'm happy to say that I just went to a conference at the University of Chicago, which is your alma mater, Jeffrey, and got to speak there on immigration policy and my critique of some research by people who are open borders activists. And that'll be up online on the 20th of this month. And I hope that people take a chance that if they just Google my name on the 20th, it'll pop up very easily, Garett Jones Immigration. And it builds on my book, The Culture Transplant, which I which came out with Stanford a couple of years ago, how migrants make the economies they move to a lot like the ones they left. So if people take a look at that, and watch this debate that'll be kicked off online on the 20th, I'm sure there'll be a lot of people offering a lot of opinions that day about immigration policy.
Oh, that's it. So will it be? So that's something that already happened. That'll be available. Where will it be available on the 20th?
It's going to be on a Substack called Heterodox STEM, run by Dorian Abbott and his partners. And so Heterodox STEM, STEM. So it's and the speech I gave, a version of the speech I gave, and some slides will be posted there. And I think it'll be quite interesting to a lot of folks.
Okay, great. I will look for it. If there's a link, I will put it up so that everybody,
Thanks.
Everybody who follows BitChute, I don't have a personal social media account. I don't ever intend on having one, but but at least BitChute does, and I will put it up I will have it put up on the BitChute account on the various platforms that BitChute has account. So I will help, in the limited way I can
Thanks
to
very
help
much.
access to that video. So I will look for it on the 20th, and just 9 days from now, and I look forward to watching it myself.
All right.
So
Well, thanks a lot, Jeffrey. Appreciate it.
what is it about what is the effort that Dorian is making with this, through this entity, Heterodox?
Well, he's basically, he was canceled quite a few years ago when he was scheduled to give a talk at MIT on, of all things, climate change research.
Right.
And that led to a big pushback. And so that's what I think kicked off his interest in basically just saying, what is it that we aren't allowed to talk about? And within the range of normal scientific debate, keeping track of some of these various culture war battles, setting out his own thoughts on social science questions, scientific questions. And so it's basically one touch point that a lot of us keep an eye on for thinking about this. And he's the one who organized this conference at Chicago, which was called the Freedom of Intellectual Navigation Conference. It was basically, they intentionally brought together a number of controversial speakers just to show that intellectual freedom of speech existed at the University of Chicago. It was a great experience. Met a lot of fantastic folks.
Well, I'm glad you had that great experience, and I will definitely share when it becomes available your talk, and I look forward to having you back on another topic. Maybe we can talk about immigration.
Sure, that'd be great. Love it.
So I like talking about I like talking about a lot of topics, and you're a great person to have a conversation with. So
I feel the same way. It's been great. The second period's gone great. Loved it. So
I'm very happy to hear that. Well, thank you for your time, Garett, and have a great day.
Take care, Jeffrey. Bye.
Bye.